mechanisms. The optimization, particularly for optimization of CIRP or PPIRP by the IPs. One example I am quoting. Suppose in PPIRP, the borrower is telling, particularly the guarantor is telling that I don't have the assets. What is the way out? Immediately, if you verify the bank credit management file or credit file, definitely you will get some information, not full information. I am not talking about the full information. So that's why for the last 4 days, what I am telling is awareness of the particular corporate data with regard to financial matters. Some of them are available with the financial creditors. The financial creditors is a part of COC, that is a committee of creditors. Whatever the information you require, definitely they will provide, because you are working to resolve their dues by way of a resolution plan. And the last resort is the liquidation. But whenever they are giving a loan, what type of securities they are taking, or what type of securities they are insisting, and what type of securities the borrower offered, all these things are available at one particular place. Simply filing of application is not the criteria. The financial creditor may file along with the standard format. He will file some papers. That papers are not suffice. If at all he is a secured creditor, what type of securities he has given? Sometimes the corporate debtor, if due to lack of information, if at all he is giving wrong information, then it is a problem. That's why if you go through the file, suppose take for example, the borrower is the creditor, the corporate debtor. Overnight, the account will not turn into non-performing asset. The signals or symptoms that are there in the particular unit for a long while, not overnight. Any unit, overnight, it will not turn into non-performing. And in that scenario, once the unit is going to be in doldrums, then the corporate debtor, definitely he will alienate some assets. He will sell the assets with a low rate, or he will transfer the assets to the known person, related parties. All these things are there. But bankers are also having some information about that one. Whatever the property, secured property is the property given by the borrower for the loan. Sometimes the property is having some disputes. The disputes are also to be resolved. The disputes are there. That's why it may be sold as sometimes it may not be sold in the market. So all these things, the person is the financial creditor. The financial creditor is aware of the full information about the borrower. If at all it is a consortium finance, more than one bank, or a syndication, or joint liability lenders, or the different banks, multiple banking. If these people are the part of the committee of creditor, they will contribute to the information. That's why the insolvency professional has to know before the corporate data what type of securities they offered, when the loan was turned into bad, whether any problem is there in the securities. In the meantime, any funds diversion was happened or not. Some information is available to them. That's why the basics of the credit management or lending is also required, is also part of the profession. Take for example, once the loan turn into non-performing, there are various ways for the corporate data and for the financial creditor to file the application or to recover the loan. There are various ways. IBC is not only one way. Insolvency and bankruptcy before IBC 2016, banks are able to recover the loans also, either from DRT or surface or that particularly one-time settlement or compromise or restructuring, whatever the various methods are there. Through the methods, they recover the loan. But when compared to that particular loans, particular methods, IBC is a better method. Why? Because here, the 180 days time, the resolution plan completed within 180, or in certain cases, extension of 90, or in case of disputes, another 60 days. Even today, in the banks, they are also doing, particularly whether to file under IBC or use the surfacing or use the one-time settlement or restructuring or compromise. The other alternatives are also exploring. Even though IBC is telling that 180 days, and it is also a little bit costlier affair. So now, over a period of time, the banks are also rethinking whether we go for IBC or surfacing or one-time settlement or compromise. That is the mindset of the bankers now. Okay, the operational creditor, for him there is no surfacing, but courts are there. But operational creditor, if at all he filed in IBC, definitely some good result will be there. Even the corporate data. Today, corporate data also, some fear is there, fear psychosis. Why? Because once IBC is initiated, definitely the powers of the director will lost. The company under the management of the IRP or RP or liquidator. So that's why the second thing is also there. Even in NCLTs, once the case is filed and the financial creditor intimated to the corporate debtor that the case is going to be admitted shortly, means in the meantime, corporate debtors are also rush up to the bank and they are requesting the bank for compromise or one-time settlement or restructuring or to repay the loan. To my knowledge is concerned, out of the 100 accounts, 10% of the cases at initial stages it is withdrawn. I have seen my friends are handling the cases And within 1 week or 20 days also some compromise. So here the fear psychosis is also there. But at the same time, if IPs are handling the case with qualitatively and it gives good results to the financial creditor, definitely they will like this particular channel to recover the loans. Otherwise, they will look into different channels. Take for example, I wrote one article also last management accountant journal of cost accountancy. The cost benefit analysis of CIRP. The cost benefit analysis of CIRP. Whether it is a costly or not costly. So here also we have to see all these aspects. Now under NPA management, NPA is nothing but stress. Today, even at a standard level, accounts, particularly non-performing assets, the borrower accounts at a standard level, some alerts the system is also giving. Once the borrower is not paid from due date to 30 days, then the account is to be categorized as zero. Special mentioned account is zero. That is within 30 days. The system is also giving some alert. Once the alert is there, then automatically instead of doing the recovery through or resolution or recovery through courts, some of the banks, they are initiated to interact with the borrower or borrower is interacting with the banker and they are compromising with each other. But this facility is also there for the operational creditor. Even I told earlier also, the Institute of Chartered Accountants of India, they have given, particularly they have instructed all the chapters and please call all the members of the merchant bankers, all members of the merchant, the Chamber of Commerce members, conduct IBC in local language. What are its implications? And once the CIRP is initiated, what problems the corporate debtor will face, all these things. I myself given one lecture in local language, particularly on IBC at Rajamandri of Andhra Pradesh. There, particularly the Chamber of Commerce members are attended. Nearly 100 people attended. They listen what is meant by IBC in local language. Immediately after the meeting is over, then 5 people came. Sir, they supplied some paddy to so-and-so rice mill worth of 1 crore 20 lakhs. He promised me to pay the amount within 20 days. But even after 90 days also, he is deferring. Whether I can raise the demand under Section 8 and I can file the case under Section 9, like very much, there is no problem. Immediately, the chapter chairman requested me, Mr. Prasad, can I complete that work? No problem. Further qualification is not required to file the application. You have to know the process. What is Section 8? What is Section 9? How much a fees? What are the forms? How to issue the demand notice? How much time it is wait? Any particular disputes are there between the corporate debtor or the operational creditor. Whether you believe it or not, on that day, whatever through my lecture, five people they paid 50,000, 2,50,000 to the chapter chairman because he is a practicing one, and he asked me the procedure. I enlightened him the procedure, and first he has issued the demand notice, and after 10 days, if the no response, immediately he filed the application with the NCLT. Immediately the corporate debtor prepared the check and give it to them. Because their legal officers also enlighten the corporate debtor about the IBC. If you are not paid that amount, then you are facing some problem. In the similar manner, particularly with the earlier, the limit is 1 lakh, default rate is 1 lakh. Now, on account of pandemic, it was raised to 1 crore. In Bombay, one chartered accountant, the professional fees is not paid by the company. That is 12 lakhs or so. So many mails, so many correspondence, so many personal contacts. He is vexed with that corporate data. Then he has taken the first he has issued the demand notice, followed by once it is not paid, immediately he filed the application with NCLT. Whether you believe it or not, at that time, not now, that is 12 lakhs. At that time, 1 lakh is the default before pandemic. Immediately they prepared the check for 12 lakhs and hand it over and get it acknowledgement. They know the consequences. So that's why today the borrowers are also having some fear psychosis on account of the IBC. Today, the stress research is nothing but the non-performing asset. The banks, particularly the banks, they have opened their specialized branches. That is called, in State Bank of India, it is called Stress Research Management Branch, SAMB, SAMB. Stress Research or SARB, Stress Research Resolution Branch. At these branches, all non-performing assets are parked and they will initiate the recovery efforts like compromise or restructuring or filing of the case with the SURFACE and the DRT or recovery through SURFACE 2002 or IBC. Because they are also created. Because here the specialized staff is there. They will conduct the COC meeting in their banks, branches, etc. So today the non-performing assets is a big problem. That's why first today I shown that bank-wise non-performing assets. But a follow-up. Once the non-performing assets are, once the loan is not paid on due date, at the most the bank will wait for 90 days. In certain cases, if the borrower is asking another 3 months or so, after that they will take initiative. Either any measure. So follow-up of stressed assets. So that's why I told in standard asset category also, 3 alerts are there, 3 alerts. That is a special mentioned account 0, special mentioned account 1, special mentioned account 2, SME 0, SME 1, SME 2. These are the alerts that are provided, that are that are given alerts to the bankers as well as to the borrowers also. During that time, some of the banks, they are rectifying that the irregularity amount of the corporate borrowers. So that's why banks are doing a lot of stress. As earlier, the banks used to sell the assets, particularly non-performing assets, to the asset reconstruction companies. Even asset reconstruction companies, banks nowadays, they are not interested. Why? Because they are asking a higher discount. What is a higher discount? If 100 crores loan outstandings are there, they wish to purchase for 50 crores or 40 crores like that. Before purchasing that one also, they will go through the total asset value, who is the management, what type of industry. They will verify the physical assets of the borrower and the unit also, and they are interacting with it. Then only they will finalize the deal. Today, the selling of assets to the ARCs are also reduced because on account of IBC. Now, you are targeting some of the people, they are targeting the banks only. Even ARCs are also you can target. How many ARCs are registered with the RBI? And directly write a letter in that particular center, if at all any asset, non-performing asset sold by the bank to the ARC, and the ARC is putting efforts, then on behalf of that ARC, you can do that one. So that's why the ARCs are also active in recovering the non-performing asset through IBC one. Next one is restructuring. The restructuring. Banks are also reluctant to approach the courts. Even though we are talking about 180 or 90 or 60, still lot of time in some of the cases it is happening. The end result also is a question mark. That's why they will study the unit. They will study the unit, and whatever the best is there, they will do it. Whatever the working capital is there, they will convert into term loan and give the additional working capital for smooth sailing. Today, the banks are also appointed agencies for special monitoring. What is for agencies for special monitoring? If the account outstanding is more than 250 crores, along with the bankers, the professionals can also handle that one. Either CA or CMA or CS or bankers who are having a good experience in corporate line, they can the bank will appoint him as the agency for special monitoring, ASM. Every year, the Indian Banks Association, they are empaneled the ASMs, and they are sending the information to the banks. And the banks, they will allot one account to each and every ASM, max two. Per month, they will give 5 lakhs or depending upon the quantum of the advance, they will give the remuneration also. What is the role? The role is nothing but, along with the bank, the professional also, who is an expert, He is also closely monitoring, has to monitor the account. And weekly, twice or thrice, he has to visit to the unit, whether production is happening or not. He will interact with the all key managerial person, and he is eligible to participate in the board of directors meeting also. And he has to submit a report on weekly intervals to the banks. Thereby, if at all any red alerts are there in the company, then he will brought to the notice of the bank also. Thereby, bank will take immediate action. As long as that company account is with the bank, ASM will also continue. The Indian Banks Association, every year they are doing this empanelment process. Not only that one, the Indian Banks Association, on behalf of all banks, they are finalizing the ASM's Agency for Special Monitoring. Not only that one, forensic auditors also. The forensic auditors, when the bank account are going to be turned into non-performing or some mismanagement or misappropriation of funds or diversion of funds are there, then the bank will appoint the forensic audit. The forensic audit, they will give the report. That's why whenever in CIRP, the PUF transactions is there, the IRP or RP, they will first they will make an opinion. After that, they will get the approval and appoint the forensic auditors. But before that, why can't you take the forensic audit report of the bank? That is readily available. And it is a committee of creditors, the financial creditors are there. The financial creditor, if you ask, definitely they will give that information for a overview. For a overview. I'm not talking about this is useful, that is useful like that. For a overview. Later on, if the borrower is continuing in the same irregularities, then you can conduct you can request the adjudicating authority for a transaction audit. In the IBC, transaction audit is not forensic audit, but people are usage is a forensic audit. Forensic term is not there in IBC. Restructuring of loan. What is the restructuring of the loan? The pandemic COVID-19, most of the companies are turning to bad on account of liquidity problem, on account of decrease in the sales, on account of close down their production department. So many things are there on account of COVID pandemic. In that particular scenario, that is a genuine case. If they approach the banks, they will restructure the loan and they will give additional funding also. If at all it is a genuine case. Every year, the Reserve Bank of India is issuing guidelines for restructuring of loans, MSME loans, MSME loans. So every year the RBI is also giving that type of instructions. And in the similar manner, banks are also on their own. They are also doing. Because instead of account turn into bad, once the account turn into bad, there is a lot of consequences to the bank. First one, the interest calculation on the non-performing assets to be stopped. interest calculation. Suppose that today I am due. If at all I have not paid for a period of 90 days, the account turned into non-performing, the system will stop the calculation of rate of interest. It doesn't mean that I need not pay interest. Once the bank is recovering, manually they will calculate, or today in almost all system, the provisions are also calculated by the system. Once it is closed, automatically it will debit to the account and credit to the interest account, and the outstandings are to be paid. So the restructuring, particularly the restructure, they will convert the working capital into term loan, and if any additional fund is required, they will provide by extending the existing collateral security to the proposed loan also. Thereby, the company will continue. So, to avoid the non-performing, one is interest of application will be stopped. Second one, the bank has to provide provision. Once the loan is turned into bad, the banks are also provide provisions. One side, no interest, that is credit side. Second side, provision, thereby dual effect of the balance, the profit and loss account of the bank. One side, no income. Second side, you are providing the provisions by debit to the P&L account. Third side, if the risk assets are more, what is the risk assets? Bank loans and advances are called the risk assets. Some of them are risk assets. If risk assets are there, on the risk assets also, the bank has to provide capital. That is called capital adequacy ratio. In order to avoid all these things, banks are cleaning the non-performing assets at the earliest by restructuring of the loans. If the product is having the particular, the future is there, particularly the product demand is there, definitely what they will do is they will do the restructuring of the loan. What is the restructuring of the loan? We will discuss in detail about the restructuring. First, we will discuss the stress resist management. After that, restructuring, etc. Follow up the stress resist. Stress resist management is a process of addressing assets that are not performing well. No repayment, no transactions in the account. Next, the unit is stopped, or unit is working below the break-even, or particularly some of the promoters, they are diverted the loans to other activity. Such a non-performing asset and a special mentioned account, that accounts are non-performing asset, but special mentioned accounts are not NPA. It is a standard only. In the standard alert accounts, red alert accounts, 30 days, 31 to 60 days, 61 to 90 days. Stress risks can be included non-performing asset or write-off or restructured loans like that. Stress risks can be risk, the banking, but they can also present opportunities to the investors. For investors, stress risks can away the purchase of quality at a good price. For banks, resolving stress can help to reduce the loan provision and contribute. Today, the bad loans of the bank is also demand is there. From whom? From the ARCs, asset reconstruction companies. The bad loans are also having its own the demand. ARCs, sir, if at all any bad loans are there, I am ready to purchase. So that type of the demand is also there for stress assets. So that's why in banks also, even bad loans are there. The bad loans, the bank is going to distribute and they're going to sell to the asset reconstruction company. This is one investment. Some investors, they are investing in the ARCs. So the bank, particularly resolving stress assets, can help to reduce the loan loss provision. Why banks are selling? One side it is not giving income. Second side provision. Third side they have to they have to increase the capital loss. Bottom line will badly be affected. Some of the things of stress classification. RBI has categorized stress assets as substandard, doubtful, and loss assets. I will discuss at an appropriate time. Resolution. Stress assets group branch, particularly in the State Bank of India, SARG is also there. SARG, Stress Assets Resolution Group is also there. One a deputy managing director, the managing director, SARG is also there. SARG means Stress Assets Resolution Group is also there. Recovery. The recovery procedure for stress assets can be focused and may enhance the around harvesting. And some companies, they are giving training. Some consultancy services are also they are providing, and legal assistance is also there. The stress assets, a lot of demand is there today. Investors are also ready to invest the stress assets. Now, what is meant to be restructuring of loans? In detail. The fundamental meaning of the restructuring of loans is to modify the loan terms and conditions. The loan is there. They have taken a 60 crores working capital and 40 crores term loan. And the business is low level. Term loan installments are not paid. And sales not up to the mark and not rooted to the working capital loan. This may be on account of loss or new ventures are started in they come up in the particular this one. So the fundamental meaning of the restructuring of loans is modify the terms of the conditions. Okay. What is the fundamental restructuring? How the revest working capital? The working capital can be converted into working capital term loan. And if a term loan already there, the term loan earlier is 4 or 5 years, they may increase it to 7 years or 8 years like that. With less amount of installment. The phenomenon of changing existing term loan terms and conditions or loan contract of the borrower is called restructuring. This process is followed to facilitate management interest obligation due to the lender, the bank or NBFC or the management loan principal initial size of the loan. Normally, the restructuring will happen one earlier. That's why earlier, corporate debt restructuring is a CDR. CDR. What is a CDR? Corporate debt restructuring. It is also a restructuring. But now CDR is a big corporate, so that CDR is removed. Particularly CDR cancelled. And CDR and S4A, or in those places only IBC was introduced. IBC was introduced. So this is a process of facilitating management interest obligation due to the lender, the bank or NBFC or the management loan principal initial size of the loan. It is usually referred as a one-time restructuring because there is a timeline to define the terms and the condition for eligibility restructuring of the either. Even it is applicable in personal loans also. Need not be a corporate loan. But for IBC sake, we are talking about the corporate loan restructuring. Restructuring considered due to the reasons which lead to severe supply chain disruption demand such as COVID-19. On account of COVID-19, lot of disruptions were happened. That's why the restructuring was happening. This is because in these times, borrower is a risk of default. So in order to avoid that risk of default, sometimes based on the request of the borrower, sometimes based on the bank's initial the proactive approach, the restructuring was happened. The COVID-19 pandemic left a significant financial stress for the customer. To address the economic fallout and make certain resolution plans, a framework has been provided the lending institution or banks by the Reserve Bank of India. That's why the Reserve Bank of India initiated this circular by way of circular. But earlier, the Reserve Bank initiated the corporate debt restructuring, corporate CDR. Today, CDR is not there. Why? Because even though after restructuring, still most of the companies are not turned into healthy companies. That's why CDR is stopped. CDR is stopped. But even though the Reserve Bank of India is giving guidelines, the restructuring of loans, most of the banks, they are not doing. That's why the pre-packed insolvency resolution process was introduced. It is nothing but a restructuring officially with the help of NCLT. It is nothing but a restructuring of loans, MSME loans, SME loans, officially with the help of. That's why before the resolution, the RP will provide services to the corporate debtor for preparation of a base plan. What is a base plan? Base plan means if at all you are doing like this, then I will pay. If subject to acceptance of the financial creditor. Subject to acceptance of the financial creditor. Next, that's why even the PPIRP is not popularized. What could be the reason? The reason is particularly the message is not percolated to the MSME units. Not percolated to the MSME units. Because in PPIRP, the only one person to file the application with NCLT is none other than corporate debtor. No financial creditor, no operational creditor. Once the corporate debtor knows about that PPIRP, still some of the people they are telling no, financial creditor acceptance is very, very poor. Once all MSMEs or where the problem is there, if they filed and banks are not accepted, then brought to the notice of MSME ministry. Then they will give suitable instruction from the Reserve Bank of India. To address this economic fallout and make a certain resolution plan, Reserve Bank of India issued based on the regulatory guidelines and framework. Bank framework, its policies for restructuring the loans of entities and individuals that have been impacted due to pandemic COVID-19. But honestly speaking, once the industry is stopped, again, activation is, it will take a lot of time. In the meantime, sometimes the damage will also happen. Sometimes additional funding is required. Sometimes restructuring is also required. That's why the second reason is the PPIRP is on account of pandemic COVID-19. The basic requirements to be eligible for restructuring of the loan is matching the application repayment history and credit report eligibility and regulatory guidelines on one-time restructuring. Even Reserve Bank of India also, they are giving guidelines on restructuring of loan. And here also, the application, what is the existing repayment, why it is unable to adhere the repayment, the application amount, no dues for 30 days, 89 days for MSME customers. There should be impact on the application specified reasons for pandemic COVID or not. If an application is restructured, the loan gets accepted. The next step would be requirement some other document as per RBI guidelines. The business entity or self-employed people, GST returns, all these things the banks will take. The restructuring of the loan is developed to provide relief. Those incomes have been impacted due to pandemic COVID-19. So that's why the restructuring facility is also there. But today, the CIRP cases are provided by the banks. They are filing by the banks. If it a lot of a delay and the resolution process cost is also increasing, then they will ventilate the same to the Minister of Finance because public sector banks are under the control of the Minister of Finance. Whichever the loans are restructured by the applicant termed as a restructure. Hence, the decision of the restructured loan should be based on the type of risk of lenders offer U or plus financial condition. Financial condition. Thus, restructuring of loans provide an opportunity to the applicant to restore their financial stability and maintain the continuity in servicing the debt. Therefore, there can be different types of loans restructuring, from lowering your interest rate and current balance, modifying your loan for longer repayment. Sometimes in restructuring, the banks will offer the concession rate of interest and period also. Sometimes in restructuring, they waive the interest. That type of discretionary powers are there to the bank. Restructuring can be very good to provide you time for repayment of your loans, but make sure that consider all the loan structuring options before moving forward with this step. This is with regard to restructuring. The restructuring is one of the NPA management initiative. One model. Because to minimize the non-performing asset and to give support to the units to overcome the liquidity problem or to overcome the financial distress, restructuring of loan is one area. Next one is compromise settlement. Today, I told earlier also, 10% of the applications filed by financial creditor, immediately corporate debtor approached the financial creditor and request the financial creditor to withdraw the loan application. Why? Because the corporate debtors tested the consequences of the particular CIRP. Once a CIRP started, the company is not under the control of erstwhile directors or managing directors or promoters or entrepreneurs like that. And he is only sit in the committee of creditors. The employees are under the control of the IRP or RP, he will take the decision with the help of the committee of creditors. So that's why they have seen the picture of a CIRP. Some of the companies, they have already tested or visualized the one-time settlement. They have visualized the CIRP picture. That's why one-time settlement was they are asking. Okay, whatever happened. I will pay this amount and please give me the concession. Or you give me the 1 month time. Like that, so many alternatives they will ask. And if bankers are ready, then they will do the one-time settlement. Today, the bankers are also, particularly during a quarter ended Q1 or Q2 or Q3 or Q4. Q1, quarter Q2, quarter Q3, quarter Q4, quarter. Before that, normally they are issuing some OTS or sometimes half yearly ended H1 or H2. Why? Because they want to minimize the non-performing assets. And the bank proactively giving some concessions to the, I will waive the interest up to this date. And if at all the shoot is withdrawn, I will extend the OTS to you. And all these things, why? Because today the banks are handling the non-performing assets in different ways and means, because their main objective is to minimize. If you see the international benchmark, the non-performing assets should not be more than 3% of the gross, not net, of the bank's total loans and advances. The gross assets of the bank not exceeding 3%. And some of the banks, they crossed even 6 or 7 like that. Once they crossed 6% non-performing asset, then the Reserve Bank of India initiated the prompt corrective action. PCA, prompt corrective action. So that's why the banks, in order to avoid that type of prompt corrective action, they are initiated various NPA management techniques. One among them is a one-time settlement. What is a one-time settlement now? A borrower who fails to service the loan and is capable of generating adequate resources in foreseeable future may have recourse to one-time settlement to pay their dues. The banks are offering. If a borrower is approached the bank, then it is called compromise. Bank on their own OTS they may offer, subject to the NPAs. And if all NPA recovery is good, they may not, it is not mandatory to offer OTS. The ifs and buts are there. Banks need to work toward settling non-performing asset. RBI guidelines which require them to negotiate and settle the outstanding loans based on the value of the asset or mortgage value. If mortgage value is more, the probability of chances for OTS will be less. But some banks, even though that is also there, they are asking, they are giving some concession. One-time settlement of the loan can be availed either in part or full based on the borrower's requirement, cash flows from the business, and the value of the collateral security and other consideration. If the unit is good and the unit going to get the income is good, value of the property is good, and management is good, normally they will not touch that account. and only non-performing assets which are going to be stress asset, then only they will go for one-time settlement. One-time settlement plans of NPS vary industry. MSME, agro industries, for instance, will have different settlements. OTS for MSME different. OTS for agro industry different because they are the priority sector advances. That much stringent norms are not there when compared to textile industry or iron steel industry because this MSME units they are giving lot of comfort to the government. The GST collections through MSME, the exports are through MSME. MSMEs are giving the lot of particularly this uh, employment opportunities and the regional imbalances are also reduced by the MSMEs. So the agro industries and for other industries, even agro industries also they will give more preference for OTS to the MSME agro industries because they are giving some comfort to the government, particularly employment opportunities and gross domestic product and the GST collections, etc. A borrower who fails to service their loan and incapable of generating adequate resources in the foreseeable future may recourse to one-time settlement to pay their dues. Bank need to work towards settling of the non-performing asset. Two RBI guidelines which they require negotiate and settle the outstanding loan based on the value of the asset mortgaged by the borrower. All the banks OTS scheme, not for all borrowers are eligible. Banks exercise discretion offerings settle the account forbidding willful defaulters from exploiting the scheme. Today, what is some of the borrower? They are willful defaults. Even though income is generated and the unit is good, funds are diverted, and that type of borrowers, the banks are not offering a one-time settlement. Particularly willful defaulters, they intentionally default with the bank and request the bank for a one-time settlement. Lending institutions may deny a borrower's request for OTS if they believe that they would be fully recoverable in principal and interest components of the loan. And on the other hand, if the value of the mortgage asset fall short of amount, the lenders believe that the business will fail to generate adequate revenue to repay the debt, banks may opt for one-time settlement. So many ifs and buts are there. The bank will explore the ifs and buts. The settlement are frequently preceded by the forensic audits. Normally, big accounts, whenever they are offering, they will closely scrutinize the one-time settlement. If a prospectus is good, funds are not diverted, he is not a willful defaulter, and the unit is nearly struggled, then only they will offer the one-time settlement. In some cases, one-time settlement, the bank will conduct a forensic audit also. Why? Because whether any diversion of funds are there or not. So one should make sure that financial documents are in place and nothing questionable and such a diversion of funds is waiting to be discovered. One-time settlement can also help address concerns such as litigations, undesirable costs, and other, particularly the apparent challenges are there. Financial firms assisting the process often leverage the relationship with the banks to negotiate the favorable term for these accounts. Besides assisting the funds requirement, these funds can also help borrower to monetize their asset, improve the cash flows, and the particularly the business reducing the debt burden. Debt burden. Now we discussed about the one-time settlement also. So follow-up of the stress receipt. Follow-up is required. From where? From special mentioned account 1 onwards. Special mentioned 1 onwards. Special mentioned account 1 onwards, we have to follow the stress receipts. Special mention 1, 0, 1, 2. From there, we have to follow the accounts. So, then next one is particularly compromise. The compromise settlement. Today, the compromise, some people, genuine people, they are requesting the bank, sir, compromise. The compromise is nothing but banker and the borrower sit together, and the banker is thinking about a security point of view. Borrower is thinking about how to repay the loan, what are the existing assets. Once the asset is the value is there, and how to pay the amount by borrowing from other sources, all these things. Even compromise settlement is not 1 day or 2 days, throughout the year. As and when, but up to the satisfaction of the banker. Up to satisfaction of the banker. Even compromise accounts, small accounts are also there. Housing account, car loan, individuals also. If they are unable to pay, then they they will request the bank for a compromise amount. So the compromise settlement is one of the important areas in the NPA management. But sometimes the banks are also some leverage. Borrower should also not stringent. He should also offer higher amount. When the asset value is there, bankers normally go for a compromise. Asset value is there. The company is the running condition. The bank not offer higher discount for the compromise. So it is in between the borrower and the banker. And today it is open throughout the year. They need not wait any circular instruction. And bank management, they will accept or not. That is depends upon the unit. That is depends upon the liquidity position of this one. A borrower who fails to service the loan is incapable of generating adequate resources. Enforceably, future may have recourse to a one-time settlement to pay their dues. Some borrower, no, this unit future is not there. Lot of competitors are there. Price war is going on. We have to dispose it up at the earliest. So the borrower who faces the service of the loan and is capable of generating adequate resources in the foreseeable future may have recourse to a one-time settlement to their pay their dues. Bank needs to work toward settling of non-performing asset according to RBI guidelines, which require the negotiation settlement of outstanding loans based on the value of the asset mortgaged by the borrower. Up to value of the collateral, normally bank will not decrease the amount. And sometimes, okay, the properties, MSME, they will offer some concession. So like a waiver of interest, either partial or full. If at all collaterals are not there, and it is as good as in our particular IBC, the borrower compromise and close the unit and open a new unit. It is as good as a fresh start, or you want to discontinue the business, this is a one chance for them. This is the best chance for them. So the bankers towards the non-performing assets according to RBI guidelines, which require them to negotiate settled outstanding loans based on the value of the mortgage by the borrower. So one-time settlement is as good as a fresh start. In IBC also fresh start is there. The fresh start. One-time settlement funding for a loan can be availed either in part or full based on borrower requirement, cash flows, business, and value of the collateral, among other considerations. This is a base for settling the one-time settlement. The settlement plans for NPAs vary by industry. MSME, agro industries, they will give some priority one-time settlement. They compromise or one-time settlement, and others also. So here the one-time settlement is or compromise. Compromise is throughout the year. Restructuring and one-time settlement, I told earlier also, the compromise. The compromise is throughout the year. And Reserve Bank of India also given certain guidelines on the compromise settlement, technical write-offs, lenders with multiple options, maximum possible amount from the distressed asset without any delay. RBI's primary objective behind this move appears to ensure greater transparency in the process of resolving distressed asset. In the problem of distressed asset. However, particularly RBI circular attempted to applicability of the compromise settlement prudential framework for the stressed assets of 2019. 2019, lot of MSMEs are faced a problem on account of a pandemic, COVID-19. The term compromise settlement, as explained by the RBI, basically means regulated into primarily banks can enter into negotiated agreement with the borrower. So it is a win-win situation on both sides. Bank has to reduce some amount and the borrower has to increase some amount. Then only the compromise will happen. The main purpose of the resolution process is effectively streamline the resolution process and also rectify the problems that are caused by the distressed asset, such as a huge loss to the lender's financial stability in the economy. Once the compromise is there or one-time settlement is there, then the borrower debt burden will reduce. And particularly today, the startup companies failed at initial stages because borrower is enthusiastic, but the market is not supporting. In that particular scenario, either OTS or compromise, either way, gives us some good results, both to the banker as well as to the borrower. Require maximum possible amount such a distressed asset by reaching mutually beneficial agreement involving waiver of claims by the borrower and a partial waiver by the banks. This is not a first instance of RBI introduced. Almost every year, every day also compromise gates are opened at the bank. But the delegation of powers are there, and once the value of the property is more, bank restricted to some amount. In 2007, RBI provided compromise settlement value resolution practice where the banks are allowed to enter compromise settlement with the borrower contingent on the decision of the management of the board of the bank. Actually, this concept was introduced in 2007. At that time only, the banks are bleeding with the non-performing asset, and that's why they started this type of initiatives. And the Reserve Bank of India also guided them. And why not the compromise like that? And at that time, the Reserve Bank of India also given some guidelines in this regard. RBI has clarified the position of regarding the compromise settlement above. This time they have taken a regulated entries into account such as cooperatives, local area banks also. In cooperative banks and the local area, the ticket size are less, but a commercial bank, the ticket size, the loan ticket size is more. That's why this is also applicable. It is reiterated that the prescribed cooling period for minimum 12 months where the borrower can take a fresh loan after the set period. In that compromise also, that's why I told her this is a fresh start. Fresh start means once the fresh start under IBC is over, definitely he will get a new loan also. And where it is provided clarification, the process of compromise is major overhaul of the current resolution framework, but rather than being practiced for more than 15 years, the guidelines are released in 2007. Even though earlier also the banks are used to do the compromise, but it is not in a scientific manner or it is not a structured manner. That's why in 2007 they have finalized this one. Concerns of the stakeholders. One of the major concerns raised by the stakeholders, particularly bank unions, has been this circular was unduly advantage to the defaulters by conducting the fraudulent default act. So compromise means some of the people they are using the particularly unduly advantage they are taking. That is also not correct because some of the people, even though their capacity is more, they are not. Okay. Furthermore, it is a set dangerous precedent by allowing defaulters to settle the large default by paying the minuscule amount of the original debt. Minuscule original amount. Even though they are having good amount of funds, but they are requesting the banks and compromise, but some fraudulent compromise proposals are also happening. Secondly, bank unions are also argued about banks are also freely allowing compromise. That criticism is also there. Additionally, there is an apprehension to reversal the entire major implication of the overall economy. Actually, today, whatever the funds the banks are giving to the borrowers, it is nothing but deposits. Once the banks are compromised or one-time settlement or written off, write-off, then the ultimate sufferer is who? The borrower, that depositor, not the banker. Banker is an intermediary between the borrower and the borrower and the depositor. Lastly, there is a concern about the circular defaults restructure the non-performing levels lower than they are also through the evergreening. Some banks, what they are doing is evergreening. What is the evergreening? Even though to show the balance sheet rosy picture, to show the balance sheet as a rosy picture, the banks they are using the compromise settlement because they want to clean it off their particularly their loans, clean it off their loans. However, instead of constituting concrete solution to the recovery of a distressed asset, ever greening is a temporary measure and different from compromise settlement. unraveling the bank union concerns, that is a general issue. They're also arguing. And the circular also clarifies minimum cooling period 12 months. Once the loan is, the compromise is there, after 12 months only again, the compromise settlement undertaking consensus with the guidelines prejudice to the criminal proceedings or other penal matters without prejudice. Hence, the argument that unduly advantaged the willful defaulters and the fraudsters are not tenable. With respect to maintain the integrity of the process, permission of the bank boards, imperative rule provided such borrowers might be debarred from the issuing fresh loans for 5 years. But once the compromise was happened, definitely the borrower's record in civil will damage like anything. A borrower's record in the civil will damage like anything. Once he is the compromise is there in the civil report also, they mentioned the compromise and accordingly the scoring will also reduce. It is pertinent to note that prudential work, ineligibility and defaulters restricting with the current circular compromise settlement. So essentially there is a fundamental difference of each other, no reversal of the process of enriched in 2019. That is the revised guidelines of the compromise by the Reserve Bank of India. And the amplification of regulated entries, all these things are general in nature. Okay. Now, the non-performing assets, the stress reserve ought to be resolved and the recovery to be improved. And once the recovery is improved, then it is a safe bracket for the depositors. And the banks are using the depositors' funds only. Once the non-performing assets are increasing, the interest not applied by the system, computer system, to the respective loan accounts. Not only that one, they have to provide some provisions. Once the provisions are made, the provisions are burden to the bank. Because one side no revenue, second side provision means the double impact will be there on the bank's net profit. In addition to that, once the banks are incurring raising the non-performing asset, the prospective investors will not invest in the banks. The rating of the bank will also decrease. Why? Because if NPAs are increasing, that is called risk assets. Risk assets requires additional capital adequacy. That is 11.5%. And risk assets 11.5 means every risk asset out of 100 rupees, the bank has to maintain 11.5 as a capital adequacy. To overcome that problem, in NPA management, banks are using the various strategies, including IBC also. Before IBC, most of the cases are filed with the debt recovery tribunal, and the debt recovery tribunal number of cases are filed. And today, what is happening? They shifted from debt recovery tribunal to NCLT, some of the cases, where the default is more than 1 crore. So here the default is once the NPA is there, once the account is turned into NPA, the total outstandings to be paid by the borrower. Suppose one home loan is there, it is 3 crores, but monthly installment is 20,000. Once one installment is not paid for a period of 90 days, then the account turned into non-performing. So 20,000 not paid for 3 months, then the account are not. Once a NPA, the total amount to be paid by the borrower. Some banks, they will ask to regularize the account. Some banks, no, total liquidity. Some of the accounts, even after 1 or 2 years also, they want to regularize. At that time, bank will not accept. Bank will not accept. So the compromise settlement or the one-time settlement or the restructuring of loan or the continuous follow-up of accounts from special mention account 0 to 2, all are the various measures that are taken by the bank. The new initiative launched or supporting to recover the NPAs, not recovery, to resolve the NPAs is the Insolvency and Bankruptcy Board of the IBC 2016. Now, one more concept I will discuss before tea break, that is advance under collection account. In some of the IBC cases also, filed with NCLT is advance under collection account. It is not reflected in the balance sheet. But a bank will open one separate account, and this separate account is not the part of the assets of the bank. It is advance under collection. What is the advance under collection account? The advance under collection account means, suppose a 50 crores loan given by the bank. The litigation started and years together, and prospects of a recovery is there, but a lot of time is taking. What the bank will be means, they will provide a provision and close that account and transfer the account to advance under collection account. In the ACA, that is advance under collection account, the account, that is not a write-off. That is not a one-time settlement or nothing. That is still, it is a live account because of good security is there, but some litigations and all these things are there. So the ACA accounts are also there in the bank. The ACA accounts under collection, particularly the ACA, the banks are also filed with some NCLTs because the security is there. Earlier, some ACA accounts are held up with the debt recovery tribunal. Once the case is in debt recovery tribunal, then they will file with the NCLT also to recover that account, because here the collateral security is good. Banks are definitely there. It is a edge for them to recover the loan on account of the prospects of income. In most of the banks, ACA accounts are there. ACA accounts means to clean the balance sheet, they will open one account and full provisions, they will close the account, and that amount transferred to ACA, it is below the balance sheet account for tracking purpose and all these things. So the advance under collection account is also one of the area. And this is also one strategy to clean the balance sheet. Why? Because if at all, as long as it is in the balance sheet, the problem is it is showing high NPS. That is one. Second one is capital adequacy to be provided. Third one is the CAMELS rating. The rating, CAMELS rating, that is also to be provided. So once the bad debts are there, to download or to clean the bad debts, banks are using different strategies. Among the strategies, the ACA, advance under collection account, is another strategy. Another strategy. So with this, Some strategies I have discussed. After tea break, we will discuss about a debt recovery tribunal or surface 2002 or what is meant a write-off. And after that, I will discuss about how the credit management is useful in IBC cases, credit management of banks, the information or whatever the appraisal, all these things, how it is useful to the particular IP during a CIRP process or the PPIRP process. So we will meet again 3:40. 3:40. 10 minutes break. 3:40 we will assemble. Okay. Now coming to DRTs, it is another channel to recover the non-performing assets of the bank. There is a different ways and means, methods are there. One is restructuring, second one is one-time settlement, third one is compromise settlement, fourth one is DRT or DRATs, and sometimes ACA. The accounts are not reflected in the balance sheet, but it is in the footnote of the balance sheet or annexure of the balance sheet. So now we will discuss about the DRTs. Because all these things you might have they studied at LIE examination also. But here I'm talking about discussing about the banker's point of view. In debt recovery tribunals, almost a number of debt recovery tribunals are there, but those are not adequate. Those are not adequate. Today, on account of pandemic COVID-19 only, the government was delayed that particular this one. What is that one? That the individuals and the partnership are not introduced. Once it is introduced, the existing DRT cases, who will handle, and IBC, that is individuals and the partners who will handle, that is also a question mark. Actually, here, if the pandemic is not arised, definitely by this time, the government may initiated that the individuals and individuals and partnerships. Actually, under individuals, the one version, personal guarantor to corporate debtor, already introduced by the government. But here, the DRTs are inadequate, not up to the mark. Some of the DRTs, the number of cases are filed, disposal rate is not up to the mark. And even though DRT is there, some of the borrowers, they are approaching the high court or different judiciary authorities like that. So that's why the DRT or DRATs are there. The debt recovery tribunal and the debt recovery appellate tribunals are judicial bodies that help to recover the debts from bankers and financial institutions. The purpose is the system is okay. Once the DRTs are handled, the cases that IBC will not arise. But that system is also some particular challenges are there. The challenges are not addressed. Once it is not addressed, definitely that system over a period of time may be defunct also. Today, banks are also not filing most of the cases under DRTs. Why? Because surface is the best one. Even though the DRT, the number of the particular issues are there, that is to be resolved by the government of India. That is still pending. Under DRT, the tribunal and appellate authority are hears that decides the appeals against DRT orders, DRAT. The chairperson headed by the DRAT. Any party agreed by DRT can appeal the 45 days of receiving the order. So DRAT, DRATs are also there, like NCLT and CLATs. But debt recovery tribunals established under the Recovery of Debts and Bankruptcy Act 1993 with a specific objective of providing expeditious adjudicating. That is not happening. Expeditious adjudicating. Once that is happened, then the IBC cases drastically come down. Because on account of delay, that IBC prevail over other acts. Some rationalization is also required. and providing expeditious the adjudicating recovery of debts due to the banks and financial institutions. At present, 39 debt recovery tribunals and 5 recovery appellate tribunals are functioning across the country. Each DRT or DREAT are headed by the presiding officer and a chairperson, respectively. So that's why the debt recovery tribunal or DRTs, they are not giving good results to the bank. Okay, it is not a costly one. Only the banks will incur the legal charges or the legal officer charges, etc. But cases are piled up like anything. And some of the borrowers, they are approaching the different courts. Thereby, the problem is arise. Recovery of Debt and Bankruptcy Act (RDB) Act to provide the establishment of tribunal for expeditious adjudicating recovery of debts due to the bank and finance therewith incidental. But a Surface Act 2002 to regulate the securitization and construction of financial assets enforcement for the matter connected therewith incidental to. So both are simultaneously that is useful in recover the bank loan. Appellate tribunals are DRTs under the RDB Act with a specific objective providing the. This is also repeat. Okay, now coming to the year-on-year basis. If you see 2017-18, the original applications disposed of 26,078 and next year 33, but against amount involved 67,263, correct? But they have given recovery certificate, but whether amount is recovered or not. Number of that is a Surface Act cases disposed 5,851 in the 2017-18. Amount involved 44,045.06. But some of the once a recovery certificate is given, then that should not be treated as a recovery. The real recovery, the amount paid to the bank for the outstandings of the borrower. So the original applications year-on-year basis, the disposal of they have given and amount involved they have given and Surface Act cases disposal of given, how many inward that is also to be given. But if that is a trend is going on, only recovery certificate issued by the DRT, then that information is not useful. Why? Because here the real recovery, bankers are asking about the real recovery. Once disposed of means that is not correct. Disposed of means it is not recovery because the cases are okay, fine. But recovery, the number of recovery officers in the DRT is also very, very less. They should give some support to the bankers, but that is not happening. That is not happening. So this initiative also, some loopholes are there. DREAT governed by the following act. DRT or DREAT govern the following. Recovery of Debt and Bankruptcy 1993, Surface Act and the Principles of Natural Justice, all these things. So here, under Principles of Natural Justice, so many people, they are approaching it to different courts. And the minimum amount of a DRT, particularly 20 lakhs, DRTs can be approached for a debt more than worth of 10 lakhs and DRTs and can be approached. And the amount of 1 lakh directed by the central government as specified in the Securitization Act like that. Debt Recovery Tribunal are established under RDB Act with the specific objectives of recovery of debt dues to the financial institution. Okay. Now coming to DRT. What are the issues with regard to IBC? Okay. DRT are there. Some of the cases, banks are shifting from DRT to IBC because a lot of delay. Even though recovery certificate given, recovery is not happening. But once a recovery certificate is there, it is to be treated as disposed. Disposed. That disposal is not the criteria. The real amount that is to be credited to the bank's account, that is the real disposal. That is the real disposal. Under Surface Act 2002, this is another initiative and to recover the non-performing asset. And you know pretty well, because this is also there in the LIA examination. But even a Surface Act also, lot of challenges are there for the bank. Some of the people, they are approaching DRT. Some of the people, they are approaching High Court. And here, these acts are not prevail over the other acts. Only IBC prevail over the other acts. Even in Surface also, once IBC is initiated, this is also halt. This is also halt. Surface Act allows banks under financial institution auctioning the commercial and residential properties to recover the loan when the borrower fails to repay them. And Surface enables to reduce the non-performing asset through recovery methods and reconstruction. Today, banks are also engaging the recovery agencies. The recovery agencies are also still they are approaching various courts and get the stay orders. All these things are there. But if it all these are strengthened, the Surface or DRT strengthened, then the burden on NCLT will decrease. Actually, today in the NCLTs also, lot of delay is happening. 180, we are telling that 180 within 14 days the case is to be admitted. In how many cases within 14 days the case is admitted? Very rare cases. And Surface 2002 is Indian law that allows the financial institution to recover the loans from the borrower who default. The act main goal is to reduce the non-performing through various recovery methods. So even though the Surface is there and the bankers are also interested to initiate or because without involvement of a court, the bank can attach the property and sell in the market and whatever the process are there, that is to be correct. In the meantime, so many roadblocks are there. That's why the Surface. But here, whenever the bank is initiated under Surface or followed by DRT or followed by IBC, you go through the total proposal. And at what time that Surface and DRT, all these things, any asset alienation or all these things are, but it takes a lot of time. It takes a lot of time. But the particularly the financial creditor, whenever they are switching over from Surface to DRT, they will put some note to the higher authorities to get the permission. And once they get they wish to get the permission to file the case under DRT, they will prepare a note to the higher authorities also. So in that case, the notes are very, very useful for you to have an idea what is happened for the last so many years like that. Some key features of the Surface Act: property auction. Financial institution can auction the borrower's residential and commercial property to recover the loan. And seizing the property. Financial institution can seize the property without going court except agricultural land. And the secured loans act applies only to the secured loans where the borrower is pledged or mortgaged or hypothecated against the security of the loan. But ARCs, the Reserve Bank of India has registered, regulated the ARCs, asset reconstruction companies. This is also one tool to minimize the non-performing assets of the company. That is asset reconstruction companies. And a notice of demand, lender must send the demand notice of the borrower obligation to fulfill within 60 days, like that. The surface criticized being biased or borrowers to get much more power to the creditors. But here, honestly speaking, this is a power is having. But if they approach the court under the principles of natural justice, they will give different the judgments. Like, however, supporters of the act argue that it is necessary to protect the interest of the both creditors and borrowers. Now, ACA I discuss, and now the IBC, you know about IBC, because these, whether it is a surfacing or DRT, is not giving good results to the financial system. That's why the IBC was initiated. Okay, first we will discuss the write-off. First we will go through that classification of advances. After that, we will go through the write-off. Now coming to classification of advances. Banks are giving on a regular basis, means daily. They are giving the loans. Some of the borrowers, they are closing the loans also. Whether it is a corporate or LLP or partnership or individuals also. But we are concerned about the corporate and LLP some. But here, once the bank is a given loan, the stipulations are to be fulfilled by the borrowers. Whatever the stipulations, that stipulations are to be fulfilled by the borrowers. So once they have not followed, not paid, then that is to be shifted to the non-performing asset. Suppose one plant and machinery 10 crores given, and the repayment is per month 10 lakhs. 10 lakhs per month means he has to pay. If at all he is not paid in a month, from that month 90 days, if continuously irregular, then that account is to be treated as a non-performing asset. The first stage of non-performing asset is substandard asset. After that, if the substandard is continued for 12 months, then it is a doubtful asset one. If that is continued for another 2 years, doubtful asset 3 years or 2 years or 3 years, like that. But in certain cases, the assets are identified as a loss assets. The assets are to be identified as a loss assets also. So that is also to be last stage of the particular non-performing asset. Once the banks are identified the non-performing asset, immediately the interest will be stopped in the account. Interest calculation stopped in the account. At the same time, provision to be made. Provisions are to be made. Interest is to be calculated, stop, and the provision is to be made. Once the interest stopped and provision, not only that one, on a risk-weighted asset, bank has to maintain a capital that is called capital adequacy 11.5. That's why, in order to overcome this type of problems, bankers are immediately filing the application under IBC or earlier DRT or surface. In DRT and surface, some challenges are there, but in IBC also, today, they are facing some challenge. Even though we are talking about the loans are 180 or 270, the 180, the 189, extension 90, 270 or 60, 330, like that. Challenges are there. But What are the classification? What are the norms? Because once a non-performing asset is there, then only that is to be filed in the NCLT. Once the account is a standard, the banks or financial institutions should not file to recover the amount on account of other issues. Other issues. Actually, the non-performing assets are guidelines are issued by the Reserve Bank of India. The guided by RBI 2015. After that, 22 also they have updated on income recognition asset class. What is meant by income recognition and asset class? Once the asset is a standard, then only apply the interest. Once the asset is non-performing, stop the interest application. There is no separate NPA norms from MSME and specified agricultural loans. There is no separate. The master directions for non-performing assets are there. NPA norms are the borrower wise and not the account wise. Suppose, take for example, one company is there. They have availed 5 loans. One is working capital. Second one is a term loan. One, term loan 2. One is for building. One is for plant and machinery. Third one is for bank guarantee. Fourth one is for bills discount. Any of the 5 loans, one loan turn into bad, the other loans are also to be treated as a bad loans. The other loans are also to be treated as a bad loans. So that's why the non-performing asset borrower wise and not account wise. Hence, one account is an NPA, all accounts of the same borrower identified by the computer system CBS through customer ID. What is meant by customer ID? Customer ID means any company who is having an account with the bank, they will open under one ID number only. Under that ID, the current account, under that ID, term loan, under that ID, the working capital, under that ID, bank guarantee, under that ID, letter of credit, what under that ID, bills discounting, all will be opened under that ID only. No restriction on downgrade or upgrade during the year. No restriction or suppose if it are part amount paid, we should not convert the, suppose one loan is there, standard, after that substandard, after 1 year doubtful 1, after that doubtful 2. If it has some amount paid, we should not they shift it to doubtful 1 or some amount paid, not shifted to substandard. The total amount that we paid, then only the doubtful 2 to standard asset like that. Accounts are guaranteed of the central government will not become NPA. However, interest of such account will not be booked. So here, accounts guaranteed by central government will not be booked as an NPA. Some of the accounts, particularly where the infrastructure finance, particularly the power projects, banks are giving loans based on the central government guarantee also. In that case, the account should not be treated as a non-performing, but the interest is to be not to be booked. Barring few, NPAs are classified on the recovery of operations. Security and net worth of the borrower is not the key factor. So here, the particularly one loan is there. Outstanding 5 lakhs. Security 10 crores. Outstanding 5 lakhs. Security is 10 crores. That account I have to classify NPA only, even though the security is much more higher than the outstandings. But if loans are banks are also, if a company fixed deposits or a company purchased Kisan Vikas Patra or any policies or NSCs are there. If that is a pledged, that is the loan taken against those instruments that are not to be treated as NPA because that is fully secured. That securities are issued by the government of India. Barring few exceptions, restructuring loans are also to be treated as a non-perform. Earlier, the restructuring accounts once restructured, then that automatically it is categorized as a standard. Today, that is not the case. Affects true and fair version of the form, financial version. Why non-performing assets classification? The true and fair position of the financial statement that is required. Today, the true and financial statements, if the account is a bad loan and if at all I am showing as a good, then it will be a problem. Auditors, accountability for non-identification. So auditors are accountable for non-identification. Banks auditors are there, concurrent auditors or statutory auditors are there. If at all they are not identified properly because bank is giving some remuneration to complete the audit. If at all whatever the mistakes are there, if at all not brought to the notice of the bank management, they are also accountable. No recovery proceedings undertaken by under the Surface Act. And no recovery proceedings undertaken by the Surface Act. Once the account is non-performing, then that is to be identified that a proper action to be taken either surfacing or DRT or IBC. Otherwise, if it is a standard surfacing or a DRT that we are not doing. Income tax paid on the particular. Once the accounts are non-performing and the system is calculating interest, then for bad loans, interest is calculating. On that interest, the income is increasing. On increase in the income, the bank is paying income tax. Thereafter, the account is to be classified non-performing. All interest is to be reversed. 1 year, the interest may be that the revenue may be up and later on the revenue may be down. In the meantime, the bank is also paying the income tax also. And this is a process, date of NPA. Once the NPA is there, no further interest to be charged. Provision as per the norms, reversal of the unrealized interest, all these things are there. Actually, the non-performing assets are like this: standard, substandard. Within the substandard also, special mentioned accounts, as I told earlier, 1 to 30 days, that is SME 0, or 131 to 60 days, special mentioned account 1, or overdue amount 61 to 90 days, and the NPA loans, substandard, doubtful, loss assets are also there. These are called NPAs. And a delay in 30 days or more, submission of stock statement. Once the loan is there, they have to submit a stock statement monthly. If at all they have not submitted monthly, after 90 days, the special mentioned account 0. And if the company actual sales and profit, the projections are by 40% or more falling short, then that accounts are also to be treated as special mentioned account 0. Returning 3 checks or more for a period of 30 days, that is also to be treated as special mention account 0. And every year, the working capital loans are to be renewed. If not renewed, then if the extension is asking, then that is also not correct. That is also special mention account 0. And substandard up to 1 year, doubtful up to 1 year, loss declared by the bank by the loss of auditors. Stages of asset classification. Substandard 1 year and loss asset, the doubtful asset 1 year is there. Loss declared by loss of the auditor. If at all loss assets, if auditors are declared that asset is loss asset, you provide full provision means we have to provide. In instance where the directly classified doubtful. Suppose today I have given loan, tomorrow the asset is disposed of, then that is directly I have to identify as a loss. If the 90% over, then that is also to be loss asset. Next, if particularly the working capital loans, the outstandings are drawing power is there, outstandings are more, then if at all it is continued 90 days, that is a substandard non-performing asset. In the working capital, no credits are there, and whatever the interest applied, and interest applied is not sufficient for credits, then also, and the substandard account renewal is pending. If the loan is not renewed for a period of 6 months, that is also substandard. And stock statement, if at all not produced for a period of 3 months, from that day, 90 days, that accounts are also non-performing asset. Interest and principal remain due more than 90 days. And meaning of overdue, as per 2.3, the master directions, overdue if not paid due date of the fixed by the bank. And particularly remain overdue, the term loans also more than 90 days, that is to be treated as a non-performing asset. Even non-performing assets are also applied to the export finance, either pre-shipment or post-shipment. What is a pre-shipment? The pre-shipment is nothing but to manufacture the goods. Only 1 minute, sir. Only 1 minute. Sir, banks are also giving loans to the companies, particularly our the companies, the corporates on export finance, that is pre-shipment or post-shipment, or sometimes import finance also to acquire the goods. For this also, the same, whatever the guidelines are, the same guidelines will continue as a status quo. As a status quo. But here, particularly the bills, in post shipment, bills are discounted normally 90 days, and sometimes they will extend up to 180 or 270 depending upon the country and the delay reasons. And post shipment export dates, particularly the packing rate advance. Once the banks are, once the borrower taken the loan, pre-shipment, he will manufacture the goods, and the same goods they are exporting to other countries, and the bill of lading or invoice or whatever the LC, all these things they will submit it through the bank and they will get the discount. But here, whatever the classification is there, it is not identification or classification, because once classified, the accounts are not giving any revenue to the bank. Not giving any revenue to the bank. So that's why the banks, they will provide the provisions on non-performing assets also. What are the provisions they are made? Generally, bank, even standard assets also they are providing provision. If a standard assets, how much is there for the bank? Into 0.40% provision and debit to the profit and loss account, and separate provision is made. And substandard, particularly the substandard, secured portion, unsecured portion. Once the loan is turned into non-performing, the first stage is called substandard. Secured portion 15%, unsecured portion 25%. Once the loan is 100 crores, out of 100 crores, 60 crores, 40 crores. 60 is the secured, 40 is unsecured. On 60 crores, 15% provision and unsecured 25%. If the loan is turned into doubtful asset 1 year, up to 1 year, or 1 to 3 years, or over 3 years, for secured portion 25%, unsecured portion 100 in 3 stages. For frauds or loss accounts, 100% provision is to be made. So this is all are the bank guidelines only. That's why banks are also, for government accounts, government guaranteed account, it is a fully secured, but the interest are not to be applied. But it is not to be categorized, because the sovereign of the state, that is state or central government, they will give this fund guarantee, stock valuation, and every every time, particularly every year, 5 crores and above, stocks are to be valued. And immovable property, whatever the immovable property is there, and the immovable property once in 3 years by approved by the valuer. Banks, whatever immovable property is there, every 3 years they will value. That's why whenever you are giving the valuation to the valuers, whether it is a plant and machinery or land and building, first of all, the financial creditor is having valuation reports. That you take it and keep it with you. Once the valuation report comes, you verify that one. Any wide variation is there. How he is calculating like that. And particularly banks are also, whenever the loans are given, they will register with ROC also. And CIRP also they will do. And once the CIRP or ROC is there, that also please verify. This is in brief about the provisions. And the last one I am going to discuss is the write-off. Again, I am repeating here what the purpose of this classes is. The purpose is to get the awareness of the banking. Because you are handling the banking cases. And okay, once the loan turn into bad, from that stage you are handling. But during the process of a CIRP, you require some information that is a vital information. This information which is available to the with the bank. So that's why if at all you know the information about the bank, definitely some positive result will happen and some information you will get it. A loan write-off, last one is write-off. Okay, I have given the loan and loan is turned into bad and I have verified and thoroughly verified and I have taken initiations of SURFACE or DRT or IBC, etc., etc. Still, the loan is not recovered. And some loans, there is no collateral security. The complete unit is completely wind up and no security, nothing. In that particular scenario also, where there is a bleak of recovery and it is difficult to recover the account on account of various disputes, bank will write off those accounts or write off. The loan waiver is different, write off is different. Waiver of loans is a government instruction. And the loan write off is where the recovery is bleak. However, both these terms apply. There is a bad loans involved. What are they? When the borrower cannot pay the loan due to whatever the reason, lenders term them bad and non-performing asset. There are two ways in which lender deal with the NPA or bad loan, either written off or waive of them. Normally, the waive is government instruction, loan waivers are there. The amount will be paid by the government. But loan write-off is the bank on their own. They will verify whether unit is there or not. Whatever the security is there, that security is good or not. All these things they will verify. Finally, they will take a decision. Differentiate parameters. What is a loan write-off and a loan waive-off? Repayment. A lender write off the loan to equalize the balance sheet does not mean that loan is cancelled. The loan account is active and the lender hope to make the recovery later on. Whatever the rate of loans are there, they will prepare the separate list. And as and when repayment is happening, they will recover and reduce in that particular pro forma entry and they will record all these things. And because to clean the balance sheet, they will do the write-off. What is a loan waive-off? Here the lender gives up all claims to a loan amount. It is completely cancellation of the loan. This way the borrower is free from the debt recovery. What happens when the loan is written off is that lenders may pursue the recovery with the help of legal entity. And this can be done since the loan is not closed. But here, lenders cannot pursue the loan amount once it is waived off. They cannot see the assistance of the legal entities or third-party recovery account, legal entities or third-party recovery agent to collect the clause collateral. If you see the written off, the lender has the legal right to retain the collateral security, pledged or mortgaged or hypothecation. They are allowed to auction the collaterals required to outstanding the loan. Later on, they will auction that particular property and credit the process to the loan account also. Waive off means that the lender must return the collateral security borrower at the time of taking the loan. So the waiver of means the government support is also there. Even corporate loans also, some of the big corporates also, where government guarantee accounts are there and eligibility. Financial institutions written off to clean up the balance sheet and optimize the tax liability. Once they clean up the balance sheet, hence all borrowers come under the purview. And loan waive-off facilities mainly provide farmers. Normally, the waiver will happen farmer community or MSME loans also to help them during natural calamities and impossible to deal with the particular this one. Compulsion. It is mandatory for the financial institution to write off loans to keep the books ledgers balance in check. But whereas a waive off borrower cannot submit a request to waive off loan, the voluntary activity of the lenders end with the government support. That's why these are the difference between the written off and waive off. The loan write off benefits to the lender the following ways. The lender can reduce the tax obligation. Whatever the provision is there, he will reverse. And total loan value after its write off. Lender can remove the non-performing and maintain the clean balance sheet. And in many cases, the borrowers do not use the entire credit limit. Only the borrower required the amount to pay the interest. And after the return off, lenders can use the funds initially blocked for the borrower for their own business operations and expense. A loan write-off does not mean borrowers don't need to repay the loan. Lenders can continue pursuing the loan amount, particularly in the return of accounts, which are received and can be considered the profit of the year of the repayment. So this is in brief about the particularly the return of and my final conclusion remarks are my final conclusion remarks are first day onwards. First day onwards. First day, I have discussed some basics of lending products. The products of the bank are the term loan, working capital, bills discounting, guarantees, letters of credit. So, every borrower, particularly the corporates or limited liabilities partnership LLPs, these two are covered under that PPIRP or CIRP, either PPIRP or CIRP. These two are covered. So, as a IRP or RP, once the financial creditor submitted the application, how many loans the borrower not paid? For those loans in the insolvency commencement date, what is the outstanding? And the each and every loan, what is the security, what is the margin money, and in case of letter of credit or guarantee, any fixed deposit or cash margins are there or not. And if you, first of all, your role is to get the full information about the financial creditor who filed the application. Normally, we are taking the order of the NCLT and not, if possible, get the application of the financial creditor. So whenever he is submitted application, he will give whatever the loans that are enjoyed by the particular borrower, all are reflected. And what security? And anyhow, you are going to give the public announcement. The public announcement within 3 days. And after that, once you have submitted the claims received from the within 14 days, the claims are to be submitted. After that, you have to verify within 7 days. After that, you have to submit it to the adjudicating authority and committee of creditors to be formed. So here, the claims of the financial creditors are also to be properly verified. How many claims are there? How many financial creditors the company is avail? For that, the best way is the latest balance sheet if available. If not, if you take the CIBIL, commercial CIBIL of the company, definitely all are reflected. And from which bank, what type of a facility, what type of a limit, when it was a standard, when it is non-performing, all particulars in a CIBIL report, a commercial CIBIL also, to some extent, the information is available. That information gives a lot of comfort to you. After that, whenever you are preparing the chart, particularly the financial creditor who filed the application, again he has to file through the public announcement. This to be cross-checked with the application. But one of the biggest problem that is arising in the IBC is stale documents. Whenever the claims are submitted, whether the document is a live document or stale document. Even bank documents also, some of the documents, it is a 3 years duration. And whether revival letter or acknowledgement of data is there or not, that is also to be verified. Particularly in case of operational creditor, the bill of exchange validity period is 3 years on. After 3 years, the bill of exchange is not valid. So in that case also, we have to be alert. Take for example, in one case, 252 bill of exchanges are submitted by the operational creditor. All are time barred. But RP is admitted the client. Once that is admitted and they are not eligible, later on it will be a problem. So that's why all claims are to be properly verified. But what is the purpose of this one is the financial creditors are with you. You are there to resolve their funds, and lot of information is available with the financial creditor about the company, about the directors, about the key managerial person, next about the product, about that particular whatever the process or demand and supply. All these things are available with the financial creditors. Today, the committee of creditors is only financial creditors. What is the rationale behind it? Because they are having good knowledge, skills. That's why they are formed, they are the decision-making authority of the CIRP process. But IP or IRP is only the facilitator. The decisions are to be approved by the committee of creditor. That's why once they have finalized the resolution plan, that is called commercial wisdom. Once the commercial wisdom is there, even NCLT or NCLAT or Supreme Court of India, they don't intervene. So they don't intervene because here, whatever this one is there, only 1 minute, sir, only 1 minute.
Class A.
So here, whatever the information is available with the bankers or financial creditors, that is a vital information about the corporate debtors. Once the account is running for 10 years in a bank, they are having good information about the corporate debtor. Because they are maintaining good relations with the corporate debtor for 10 years, in certain cases 5 years, in certain cases 3 years, certain cases 15 years. Because once the company is defunct means not within 1 year or 2 years, over a period of time. So over a period of time, even though the bank officials are changing, but the next person who is get the full information about the company. And not only that one, even forensic audit, sometimes if the company is misappropriated or diverted the amount, banks will go for the forensic audit. Not only that one, every month the bank usually obtain the stock statements about the stock. So what is the stock? And accordingly the bank will give this one. Not only that one, every month the inspection, some units every 2 months, some units every 3 months, they use it to visit, and whatever the vital information about the unit, they will submit to the top management. That document is also vital document. And the next document is the insurance policies. The insurance policies of the bank. The insurance policies are available with the bank. How many policies are there? Because the CVC member is with you only. He is not a new person. He is not a part of the CIRP. He is a key person part. You are the administrator. You are the facilitator. The decisions are to be taken, and you are there to help them. So, whatever the information you require, definitely the committee of creditors will provide. For all assets of the company, whether it is a movable or not non-movable, definitely company, on behalf of the company, the bankers will take the insurance policy. That is also to be taken by the IRP during the CIRP process. Not only that one, even in chemical industries, the vital document is the pollution control board renewal. Every year that is to be renewed. As if the unit is a going concern and you are running the company without pollution also, that is also government will impose the penalty. So that's why that is to be renewed. Even a listing agreement, all these things. Second one, whether he is secured or unsecured, the different types of charges are created on company assets by the various lenders. So section 77, the ROC, that is a charge creation, or CERSI, that is say under surface, that is also useful. Take the printout. Not only that one, and if the company vehicles are there, all vehicles are to be they registered with the RTO, regional transport officer, and a hypothecation agreement will happen. So here, all these things are available to you. Whatever the any shortfall communication is there, that you get it from the financial creditor. Financial creditor is having a good information. At the same time, the information is also available within the company, particularly the key managerial person or finance department, etc., etc., etc. And the purpose of this class is because you are going to handle the bank bad loans. And if at all you are not having full idea or grip on the bad loans, and during CIRP, if at all any vital information is there, if you are not touching the COC and touching the other person to get the information, then it will be a delay process. Next, the character of the astral directors also. The financial creditors are having good grip or command. That director, this director, that director. Even related parties also, the financial creditor knows because 10 years or 5 years or 3 years, he is the financial creditor having good liaison or relationship with the company. And whatever the information that require, you please first check it up with the committee of creditors, the financial creditors, who are the day and day out they are getting. Even if at all the financial statements are not available, that may be available with the bankers. For working capital, every year they have to get the financial statement, updated financial statement, or in some cases, audit financial statement. That is also available with them. And because stock audit, the stock audit is also one of the important audit. Every year, the stock audit report is also available with the financial creditor. And whenever any stock is removed or sold or related party, some entries, some information may be available in the particular this one, that is stock audit report. Beyond all these things, the due diligence of that particular this one, due diligence. What is a due diligence? Due diligence certificate is a compulsory 5 crores and above. Today, most of the banks, they are engaging the professionals and completed the due diligence certificate. So once the due diligence is there, the due diligence is to be verified. In due diligence, 29 items are there. If 29 items are there, that 29 items are to be verified by you. Then only you will get some information about the company. This is a due diligence every 6 months. That too RBI guidelines. If you ask the due diligence, the bank will provide Xerox copy. Then that is useful for you also. So with all these things and the knowledge about the banking, because they sanctioned the loan, they process the loan, they verify the feasibility, they will verify the viability of the unit, and for the last 5 years or 10 years they are with the company. That person is a valuable person for you for getting information. For getting information, you are working for that purpose person along with operational creditor and class of creditors. That's why this is a very, very important, and we have to they get this information. Then only the success of the project will be more. So I wish you all the best. Thank you very much for giving me an opportunity to discuss about the banking subject, particularly the banking, which is useful to some extent. I'm not talking about only banking subject is useful to the CIRP, because the CIRP, we should have managerial skills, we have leadership quality, we should have the management skills, what not all, in addition to the IBC, in addition to rules, in addition to regulation, then only the complete blending of all these things gives good results in discharging your duties effectively and efficiently. So thank you very much, sir. If at all any doubts are there, I am ready to clarify your doubts with regard to this subject. Sir, if at all any doubts are there, definitely I will ready to clarify your doubts. If there is no doubts, we will wind up. Tell me, sir, any doubts are there? Okay, in that case, we will wind up. Thank you very much. Thank you to all.
Thank you, sir. Thank you for sharing your experience and learnings and making this session so insightful. Thank you.
Okay, sir.